Hello, everyone, and welcome to the Traders Mindchat show. I have a special presentation to run through with you today. It's going to be called Building a Simple Winning Trading Routine. Now, for those of you that were with us earlier during the Traders Circle, this will look a little familiar to you, but for the benefit of those of you that weren't able to attend, I thought that we would do it again. And so I want to talk to the part-time traders out there that are trying to put all this stuff together and are having a little bit of difficulty with it. Some of the biggest challenges that people are facing, this is a list of what came in. So the biggest challenges that traders are facing that are trying to trade part-time, they're having trouble with their routines. They're having trouble performing in-depth analysis. If this is you, go ahead, type into the chat. Don't be shy because I've felt each one of these at different points in my trading career. So there's nothing that you're going through that I haven't personally felt, and this is a whole list of what people right now are also feeling too. Holding out for a bigger move. When do you do that? Time putting into this trading thing and trying to make it work. Creating a system that fits you. That could be pretty difficult to figure out too. Like, well, what do I put into here, and how do I make this work? How do I make sure managing risk, consistency, narrowing your focus? All these things are huge for part-time traders right now. These are the answers that came in early today. What it boils down to, most part-time traders fail because they're overwhelmed, they chase too many opportunities, they tend to overcomplicate their strategies and burn out before seeing any kind of real results. Now, that was almost me. That was almost me, truth be told. I've been trading since 1999. And that's when I opened my first ever account. And back then, I just walked into my local bank. At the time, it was Astoria Federal Savings. They had a financial kiosk, and I thought that's where you went to go buy stocks. So I walked up there with my 5 grand, and I said, I'd like to buy some stocks today. And they said, whoa, kid, that's way too risky. You don't want that. What you want are these. And they handed me a big stack, about this big, of prospectuses for different mutual funds that they had. And so I put my money into there. I eventually selected a couple of them, and they started out doing good, about 10% in a couple of months. That's pretty strong returns, right? I'd take that right now. But I thought that my money was safe. And I thought that it was safe because I had given it to the professionals. I had loads of diversification and I had loads of time. Plus, unbeknownst to me at the time, I was buying in right at the dot-com bubble when everything was going up. Well, I held that for 3 years until I graduated in 2002. I went back and I checked my account, and it didn't keep on compounding. In fact, I had 20% less than when I handed it off to them 3 years prior. So that was a very difficult lesson. And I tried and failed and tried again. And thankfully, somebody came along and handed me a very valuable book. In fact, it just grabbed it right off the shelf. It's this one right here. I'll make the screen a little bit bigger here. This one right here. This is what a coworker handed me about 10 years later, How to Make Money in Stocks by William O'Neill. And the first 100 or so pages of this book, they're all charts, they're all model books, they're all marked up, and it's fantastic. I read this like it was a cookbook, right? Studying it like I was studying for my graduate degree. I have an MBA. I was taking it like that. And I started to see, well, at least things started to make sense, but I had difficulty putting everything together for a while. I was still falling into this trap of trying to chase too many opportunities, overcomplicating things, because even though I was able to read a book, that doesn't mean that I was able to do everything in the book, at least not right away. So later on, after that, I found this investing group. They still have this group today. In fact, I'm one of the leaders of this group. It's called the New York City Investors Business Daily Meetup. And it was taught by a couple of full-time traders at the time. One of them was a hedge fund manager, and I was the kid sitting in the audience. And what I learned from these guys was that you could trade this book. You could trade this book right here in a variety of different ways. Not saying that, you're going way off the reservation where O'Neill's talking about growth stocks and now all of a sudden you're busy trying to do Warren Buffett style. No, that's not what it is. It's you could be long term, you could be short term. The main thing is that you're getting it to fit you, that you're getting it to fit your lifestyle. And that's one of the magics of not just this system, but getting other people around you, starting to see what can actually work. And then when you start to put all that together, that's where you blow stuff like this out of the water, where you're not chasing too many opportunities. You're not overcomplicating. You're not burning out. And you are starting to see some real results. Now, before we get into building your routine, I want to ask you a question. Do you know who this is? Anybody know who that is? Go ahead, type into the chat. Let me know who that person is. I'll take a sip of water while we wait for some comments to come in. This guy right here is Ted Williams. Now, you might be asking yourself, well, what does Ted Williams have to do with trading? Well, I'll tell you this. It doesn't have to do with me being a Boston Red Sox fan, because I'm not. I grew up as a Yankee fan. So why would I even bring up Ted Williams here? The reason why is because of his great book, The Science of Hitting. And he had some really great points in there that I think apply directly to trading. So let's read this little excerpt here together. My first rule of hitting was to get a good ball to hit. I learned down to percentage points where those good balls were. The box shows my particular preferences, right? So this whole thing in here, right? That's the whole preferences. So from what he considered his happy zone, which were the ones in the smaller box right in here, that green box, that's the happy zone where he could hit 400 or better, to that low outside corner right over here, where if he was consistently swinging at this stuff, it would be his batting average would drop down to 230. Only when the situation would demand it for him would he go for these outside pitches. So wouldn't this be great to know for our trading? Wouldn't it be great to know when we could aim for the balls and the strikes and which ones are coming right down the pipe? Wouldn't that help your trading? It absolutely can. And the way that you could do this is to build something that looks a little bit like this. Now, this is my personal model book, or I should say an excerpt from my personal model book. What I do, and what kind of falls in line with what Ted Williams was doing with baseball, I'm trying to do this with trading, is to figure out which pitches should I be swinging for and what makes for a good looking pitch, right? That's what you want to do. Whether you come up with something that looks just like the spreadsheet here, there I see a few of our members in the audience, so you guys should be very familiar with this, and hopefully you're using it. If you're not using it yet, consider this to be your invitation to use the model book. But this is the strategy for how you're going to be able to find your happy zone, find the right pitches to hit, and not waste time swinging off the plate. Because that's where people are getting stressed out. People are getting stressed out because they're busy swinging at anything. You don't want to swing at anything. You want to swing at pitches that are right in the happy zone. You find the happy zone by defining your setup. So my definitions of setups are based on the chart. So I'm looking for different patterns and I'm trying to define those patterns. And then I try to figure out, well, what makes for a great pattern? And then after that, I find a few different models of that pattern. So it's almost like you're studying the tape to see, well, how does this type of chart, well, how does it develop? In what markets does it develop? Are there other nuances to this pattern that you might want to be aware of? So that way, when you're seeing it in real time, you know if it's going to be the fat pitch that's coming right down the center, or if it's going to be a little bit off, or if it's way off and you should just avoid it. That part alone, right? Earlier this week, I got this question of how do you go through your charts? How do you flip through your charts? Because I tend to flip through my charts fairly quickly. I was showing this to some people earlier, right? So here's one of the charting platforms that I use. It's called Deep View, and we happen to be on a universalist right now. So all these stocks are already passing my screens. The way that I would be flipping through charts, the speed that I'm flipping through them is about this speed right here, right? And as one catches my attention for what I might want to add to a potential list would get flagged. But at this point, many of these are extended. None of them are really setting up. And so I'm able to just keep on flipping through them because I know exactly what I'm looking for. Now, the first one that catches my attention is this one right here, right? Uh, HBI. Now, that doesn't mean that this is definitely a good pitch to swing at. It just means that, hey, it's somewhere in here, catches your attention. Great. Now, what I want to do is go through and see how closely does it fit the model. Does it have any of these things that take it from good to great? I call them boosters, but call them whatever you want. Does it have any of those? So that way I know if this is a pitch that's somewhere over here or is it somewhere right in the middle? Now, I might swing at a pitch that's right in the middle. That doesn't guarantee that we're going to get a hit. It increases our odds of success, but it doesn't guarantee a hit. 400, right? So even when you're swinging at the right pitches, you could still be a 50-50 batter. You could still be a 400 hitter. That's okay. That's going to get you into the Hall of Fame if you keep on swinging at the right pitches. And if you've narrowed down your field of focus, then you're not just swinging at anything. The stress starts to melt away because you know exactly what you're looking for. You're not looking for stuff out here. You're looking specifically for this. And like I said before, you come up with your own version of this. I share this with people in our programs. Many of them model it. Many of them come up with their own version. Like they'll go into the spreadsheet, they'll use it as a template, and then they make their own. That's actually something that I recommend doing. So that way you've got your own hands in the dough, and you know what you're doing. Now, building out your routine, here's a few things to think about. You need to think about your beliefs, your goals, and your ability to execute. The reason why you've got to think about these things is because if the routine that you come up with, if you don't believe in it, then you're not going to be able to do it. So if you see this stuff and you're like, well, why is Mike talking about Ted Williams? Or maybe that sounds like a good idea, but there's something else in the back of your head where you've just had a habit of checking social media and going to the news and trying to learn everything that you possibly can. And that's something that you've been doing for a very long time. Well, that might be something that you need to wrestle with a little bit and sort out before you go and you adopt new beliefs, because it's possible to blow up some beliefs, right? So sometimes it's easy to pull a weed out of the ground, but sometimes if a weed's been there for a real long time, it takes a little bit more effort to yank it out of the ground. You know what I mean? You also need your routine to help you align with your goals, whatever your goals are. Sure, financial goals, of course, but what about the goals that you have as far as time in front of the screen? Maybe you don't want to be looking at the charts all day long. Maybe you don't want to have alerts going off in the middle of the day. Maybe one of your goals might be that, you know what? I want to look at this stuff after work. I want to take a closer look on the weekend when I have a little bit time when things are a little bit quieter. That's when I want to be able to do this. That's great. You could do that. Trading is a thing that we could make up whatever routine is going to work best for us. So, does this routine that you're building for yourself, does it fit all those goals? And then your ability to execute. Can you go off and follow the routine that you've laid out for yourself? If it fits all that stuff, you're in a good place. So your routine should also answer a few fairly simple questions. It should tell you what to buy, when to buy and sell, and how much to buy and sell. The way that I go about tackling these three questions here is through this diagram. Now, again, uh, those of you that are already in one of our programs, you've seen me talk about this before. For those of you that have been on our channels before, we're streaming to YouTube and Facebook. We're streaming over on X and a couple of other places. You've probably seen me talk about this before. If you've read my book, The Trading Mind Wheel, you've seen this before. But for the sake of those of you that have not, or to give you a little bit of a refresher, this is how I'm viewing the market. I view the market in a couple of different ways, and I'll give you the 10,000-foot view of how this works. So, 10,000-foot view, the general market. I want to narrow it down to just looking at the major indexes across multiple time frames, which means that I'm looking at the S&P 500, the Nasdaq, Russell 2000, New York Stock Exchange, and the Dow. I'm looking at them on daily, weekly, and monthly time frames. What that does for me, it tells me how things are moving in the short term, in the intermediate term, and in the long term. And it's telling me, are they moving together or are they not? Are they moving up? Are they moving down? Are they moving sideways? When things are moving together, we tend to get smoother moves. When things are not moving together, then that's when we start to see some choppiness. Most of the time, the market is in a choppier place. But when things do begin to move, that's where the bigger moves happen. Just last year, 2024, pretty decent year for me. For the most part, I had about a 30% return overall on the year in my main account. The bulk of it happened in 3 months. The other months were up a little bit, down a little bit, but the bulk of it happened in about 3 months. So, what does that tell us? That tells us that for the most part, the market can be in a choppy place. And when the market does start to work, then it's time to put money on the line and maybe start to scale up. So, how do you know when is the right time to do all that, right? Because there are some moving parts in there. That's where understanding the system part comes in, right? So, well, what's a system? The way that I look at my system is what stocks are passing my screens, what types of stocks are passing my screens. What sectors are they coming from? What industry groups are they coming from? Are there more? Are there less? How many of those stocks are setting up in one of the patterns that we spoke about before? Are those quality patterns? And if they are, great. Are they working? How's the market treating those stocks? Because that's going to tell me quite a bit of how heavy or light should I be. Should I be stepping on the gas? Is it a green condition? Is it moderate, a yellow condition? Or should I be right in the brakes in a red condition, barely putting on any kind of size or risk at all? Finally, personal performance. Am I winning or losing? That's going to tell you so much because if you've done the first part, right? If you've gone and you've set this up for yourself, you've set up your model book, and now you've got your strike zone, and you're just focusing on stocks that pass the happy zone, well, that's going to tell you something. It's going to tell you if it's a great time and you should be scaling up because if you find stocks that are coming into the happy zone and you're swinging at them and they're bombs, right? Like you're hitting home runs, then guess what? Then that's telling you time to step on the gas. This is your big money making time. If you're not, then that's also telling you something about the current market environment and you should be putting on less risk. That's how just doing these three things can really help your trading and help your trading dramatically and to help filter out so much of the noise. One of the things that we spoke about earlier had to do with noise, right? So here are the things that this can help you. It's going to simplify your approach. Anything that's not a part of this, anything that's not a part of your routine, it's noise. That alone is going to give you speed. It's going to increase your accuracy and it's going to reduce the amount of tension that you have because it's not like, oh, well, I need to research this or that, or, oh, that person just said something that I had no idea about. Let me go chase that shiny object. No, you've already built your strike zone. You're just focusing on that. Everything else is noise. That's what makes this doable for part-timers. That's how you, as a part-time trader, can end up outperforming a hedge fund, right? Because most hedge funds are going to do basically market returns. That's how you could outperform the big guys. But it takes focus. And it does take effort to build out something like a model book. It takes some time to build out your strike zone. But once you've got this, right? Well, and it actually, well, if you're studying the right things, it's not going to take all that long to build this out. And then once you've got it, then it's not going to take that long to do your routine all the time. You saw how quickly we were flipping through charts earlier, right? To find stocks to trade that fit into the strike zone, that part for me maybe take about 20 minutes, right? Not long at all. Identify a few key setups to master. You need to ignore the rest. That's going to completely simplify your process. And that's one of the big things that we're after. Design the routine around your schedule. That's going to be key. Most of my routine is done when the market is closed, at night, on the weekend, and doing it that way for the most part is a big part of what's making it manageable. You could customize it to be whatever you want. I'm just sharing, well, what's been working for me. And at night, on the weekends, it makes it a lot easier to sit down, concentrate, focus. That's really what you want to be able to do. And so I mentioned this to a few people earlier. I'll mention it to you guys here. If you want to see it in action, you could join our research program. It's free for 2 weeks. And here's what you're going to get with it. You're going to get daily reports and videos from me. Every video is in the ballpark of about 10 to 20 minutes per day. Some of our people like to watch it on 2 times speed. A few of you that I know do that are in the audience right now. And that's great. Cut down the time even more. But in those videos, I aim to explain things very well, what I'm seeing in the market, perspectives, why I have those perspectives, the stocks that I'm seeing, how they're setting up, the trades I'm planning to take, the management of the trades that I am taking. I give full access to my trading plan and every single trade that I'm taking. You're also going to get a customizable trading journal that's in a Google Sheet. You get the Google Sheet, you get to edit it. You get quick start education and also email support. And all that is only for $4.97 for the year or $49 per month. And if you want more help, you can join our trading accelerator. So what's the trading accelerator? The trading accelerator, you get everything in Mara research plus live group coaching. So every week we're getting together on Google Meet. The microphones are open, the video's on, get to see each other face to face. It's great. And we'll go through current markets together. We'll go through any questions that you've had during the week together, things that we want to dig deeper into. We do a weekly trading lesson and we discuss that too. And that generates great conversation. So it's a really great time and it's a small focus group. Normally we have maybe about 10, 15 people jumping onto any one of these live group coaching calls. So nice intimate session. You get direct access to me and the other coaches in the program. You get to be a part of our private Discord community. So there's not tons and tons of people all in this Discord. No, we keep it just for accelerator members. The people in there are fantastic. They all help one another. We mentioned the weekly trading lessons already, and you also get access to our advanced video archive. If you're somebody that wants to really go in and watch videos one after the other, you're able to do that as well. And we've got close to 100 videos in that advanced video archive right now. If you're interested in the accelerator, it's $9.97 for the year, or it's only $97 per month. And that is that. So I'll leave you with this. If you want to simplify your trading, the best way for you to get it is to think about the strike zone. Think about the strike zone. Think about your happy zone. Think about limiting what you're going to do. When Ted Williams is at the plate, he's making some big sacrifices. What he's sacrificing is everything outside of the happy zone. He's just going for what's in that little green box. That means that there's all these other pitches that he's not swinging at, right? One of the big things that people talk about, and if you do have questions, now's the time to start putting your questions into the chat. One of the big things that I hear people say is that they're missing out on opportunity. What if I miss this trade? What if I miss that trade? Ted Williams is able to increase his batting average by missing pitches because he's not swinging at stuff up here. He's not swinging at stuff over here. He's not swinging at stuff down here. He's swinging at stuff that's in the happy zone. And he's only, later on here, he would say, he's only swinging at stuff down here if he absolutely has to. Well, guess what? In trading, you don't have to place a trade, right? It's not 3 strikes and you're out. There's unlimited strikes. You could only, if you choose to, you could only focus on stocks that meet your happy zone and swing at those. And how much of a better trader are you going to be? Let's take some questions if you have them. Otherwise, I think that that's a good spot to wrap up. I'll also mention too, for those of you that are not already subscribed to the channel, wherever it happens to be that you're watching, make sure that you like and subscribe. And if you're not already on our newsletter, we put out a free newsletter multiple times per week You could go to merrillwealth.com/newsletter. You could also go to merrillwealth.com to learn more about our programs, the research program, as well as the trading accelerator program. All right. Looks like that is it for today. So hopefully you found that helpful. If you did and you're watching the recording later on, I'd love to hear about it. I answer all of the comments. And that's it. Take care. Much love and God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Merrill Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.